Thanks a lot, Scott. Real quick before I get started, I can't see any of the questions that get typed into the text chat. So later on, when we do a little question and answering, I might not be able to see that. If you can take a look at that.
Yeah, sure thing.
Okay. So I just want to make sure everybody can hear me. So again, welcome to this one stock, one trade strategy. My name is Doug Rumer. I've been a trader now for 20 years, a professional for over 15. I'm also the lead trader and the founder of the lincolnlist.com. So I'm going to talk to you today about one of my favorite strategies that really was pivotal in my trading career, that took me from a failing amateur into someone who was very successful. Because in those early years when I was struggling, I was going probably through a lot of the things that many of you are going through, just trying to build consistency, trying to have regular profits, trying to just move forward. So we're going to talk about that today. And before I get started real quick, I don't know how many of you know who I am or ever have heard of me. I have been to the summit before. I have done webinars. But if you have a moment and you're active on social media, I'm just going to post up here real quick a few of my social media outlets. Just like a lot of people out there, I'm constantly posting ideas, constantly doing free educational content on all of these, on Twitter, Facebook, Instagram. So if you're active in that and that is your thing, excuse me, take a moment and go ahead and follow me there or keep up to date with the Lincoln List. So like I was saying, if you're somebody who feels like you are always chasing moves in stocks and you feel like your day ends with just missing out on opportunity after opportunity, or maybe you've traded for a little while, maybe you're new, but you just seem like the market is it's just overwhelming. It's like this big animal beast that comes at you every day, and you just get confused easily. It's hard for you to multitask, that kind of thing. Or you feel just like you're one step behind and you don't have any consistency. One of the things I often talk about is the accordion effect that really hurts traders. And that's where you start to think and feel that you have some sort of consistency because you see some results, and then all of a sudden something will come by. Maybe the market turns the way that it acts. Maybe you take a couple of stupid trades or something, or you kind of lose your composure for a moment, and then you take 10 steps back. If that's you, then this one stock, one trade strategy could be a very good solution. And I'll tell you why. Because when you're brought into trading, we're kind of all funneled the same way into this business. Even though I started back in '99, I kind of was brought into it the same way. It always seems like it's about hot stock picks. Like, he always reminded every day of what stock's going to be the next Amazon. Or if you would have bought Amazon at 20 bucks or 30 bucks, whatever it was in the late 90s, you'd be a quadruple gazillionaire right now. Or all these micro cap players are out there, and you see these big BPTH, excuse me, those types, the VLTCs, dry ships, the rest of those. And what you do is you get into this habit of constantly feeling like you've got to chase this next opportunity. And then you have all of these scanners, all of these alerts. Maybe you're extremely active on social media, following a lot of people. Hopefully you're not just blindly taking their alerts. But if you're kind of doing that every day, I want you to take a moment and think about what are you asking yourself to do here? Like, you have all of these stocks that are being traded throughout the day. You're not going to be good enough to catch every single move that's out there. So one of the things that I talk about here before we actually get into the core of this strategy is there's a thing that's called decision fatigue. And I think a lot of traders struggle with this, especially amateurs or those that are very new to this. And you only have, psychologically, you only have enough capability to process so much information and so many decisions in a single day. So when you think about all of the stocks that are out there to be traded, all of the people on social media that are bombarding you with, hey, this is the next hot stock pick. You got CNBC, you've got Bloomberg, you got news. When the market goes off, you've got all these red and green lights, alerts beeping everywhere. Many of you may use excessive scanners, and you've got all this stuff going on. It's really difficult to process that information quickly. And not only that, be able to execute the information that you're processing, because the markets, they just move too fast. It's hard for you to catch everything. And like we always say, you know, if you guys ever watched the original Point Break, this stuff can lead you to having fear, hesitation, paralysis by analysis. And at the end of the day, all you have is a handful of these great ideas, and you were never able to execute any of these ideas. So on that note, I want to kind of run this strategy by you guys and see if this is something that could help you simplify your business and get rid of a lot of these problems that hinder traders for consistency. Because before we get started, this has always been about consistency. So if you're someone that's sitting there right now and you're like, how do I do this for a living? How do I bring in money all the time? You're never going to hit those big home runs, most likely, like the BPTH or whatever the ticker was. Or you're not going to be the person to buy dry ships at $2 and sell it at $300. Maybe you are, or maybe you can make a lot of money on that. But if you're looking for a long-term sustainable source of revenue through trading, that's going to be one of the more difficult types of paths that you can take. So let's kind of talk about this here for just 1 second. So what is this one stock, one trade strategy all about? The purpose and the theory behind this is for you to be focusing on only one stock or one financial instrument. Maybe some of you out there trade futures like the E-minis or the NQs or something like that. And when you do this, what it does is it reduces that decision stress that you're putting on yourself and allows you to have maximum focus on one specific area. Now, when you have that one specific focus in that one direction, it's easier for you to forecast moves and easier for you to predict how moves are going to work. And what this does will eventually eliminate many of those bad trader behaviors that you have, like FOMO, fear of missing out, chasing moves continually, being confused about where proper price levels and price action or what the market's actually telling you. Because one of the things that many traders look, if you just kind of read down there at the bottom, we're all kind of brought into this business to focus on setups. And you do need that. You need a process. You need setups. Indicators, they are important to you. But what traders do is they always seem to overlook rhythm patterns. Like there's a rhythm and a tone and a speed to the market, which many people never really pay attention to. So when I'm going through this, here's what I want you to think about: what this strategy's core theory is and why it works. It's like we all have somebody and some people that we know, whether they're in our inner circle. And when you get to know them or you meet them for the first time, you have this initial impression of their attitude, their behavior, and you react to them accordingly. But then kind of like later on, you get to know other things about them. And maybe some of their like bad behaviors come out, like you get into a relationship, you're like, oh, they're so sweet and nice looking and everything. And, you know, few months later, you're like, oh, I didn't know you did that or did that. You guys know what I'm saying. And then you start to learn these little intricate behaviors, and sometimes they just bother you. But nonetheless, by being exposed to that same person day after day, minute by minute, you start to notice things that you didn't see originally. And this is what we talk about with this one stock, one trade. Your constant exposure to seeing this thing on a regular basis, day in and day out, 6 hours a day, 5 days a week, 52 weeks a year, you're going to almost know what it does before it does itself. Because for some of you that have traded for a while, you may know and think and understand that a lot of these stocks, they have behaviors, right? Like a Tesla. Like a Tesla has a specific behavior, the way that it acts. It's almost like it is a human being. And they do work like that because human beings trade them. So these stocks have emotions. Now, what we're going to do here is I'm first going to talk to you about rhythm patterns, so you can all get on the same page. I'm going to show you a couple of charts here. So what I've done is I have just put a few things here, no names on these charts. No numbers, no prices. These are real charts, current charts being traded in the market. So on this first chart, I just want you to take a look at it, everybody, and see, is there anything that you see happening over and over again? I'll give you a minute to think about that, but does anybody see anything that's going on here that might be repetitive or a certain rhythm to this chart? Okay, pretty good. All right. So I'm going to show you here. I'm sure this was pretty easy, but take a look at this chart. This is every single day. This is an intraday chart. So every day, this stock right here takes off in the morning, goes straight up in the morning, then immediately sells off. Now, this is something right here, this little pattern I often refer to as a TP, like those Indian TPs, or an A-frame house, where it gives up almost 100% of the initial parabolic or the initial rip move right here. So you can see it. The next day when the stock opens up, if you can kind of look, it does the same thing again. It goes vertical at the open, then it sells off. Does it again, goes vertical, and then sells off. So I want to ask you this question here. There is no MACDs on this chart, or moving averages, or floor pivots, or stochastics, or Fibonacci's. It's just a chart with no prices. But seeing the way that it moves, how many of you out there can see this? And how many of you can see that there's money to be made in this continual, repetitive pattern, right? I mean, there's a lot of money when you see something that continues to do this over and over again. Now, if you don't pay attention to this stock and you're just busting them off of scanners, or the names that are on your stock or continue on your stock watch list, excuse me, are constantly changing, you're never going to see this type of behavior. You're going to miss out on some of those really small, fine details. But just look at this. It's over and over again. And when you have something that operates with this type of predictability, and with this type of frequency, this, guys, this is where you ultimately get rich trading stocks. I'm going to show you some other ones. These are popular stocks I'm showing you. I'm just not holding the tickers. Here's another one right here. You can see that how it kind of rolls down in here and builds these levels. I'm sure that most of you are aware of simple support, simple resistance numbers, but you have the same type of pattern over and over again. So take a look at this stock. It bounces and then it rallies up. Now there's certainly, I've hidden the prices on these, but there's a number here that obviously means something. And you see how it just gets rejected. Then it comes back up, it gets rejected again, and it trades back into that same level. And these stocks just keep doing this over and over again. So it doesn't matter, you know, about how many stocks that you have to look at every day, or what is the next hot stock pick, or the next penny stock pump, or you know, what's that stock you're going to put $1 into and sell it for 800,000 one day. It's all about finding things that are consistent rhythmic behaviors that will give you, the trader, the edge. So when you looked at that first chart, you see that edge, and you're able to find strategies and certain things like that to exploit that edge for you. And again, that's how you end up making big money as a stock market trader, is by exploiting those edges and doing that continually, day after day, minute by minute. So now that you've seen some of these, or you got the idea of how this works, you may ask yourself, what kind of stocks are best suited for a strategy? Like what kind of stock you can trade every day? And the easy thing about this is you're only looking for two main criteria. Now, I want you all to understand, as I'm talking about this, I'm just giving you the basics. As time goes on, there's, you know, like I said, there's no moving averages on that chart, stochastics or anything. You know, as you develop with consistency, you can add those things in. I'm not saying that those are bad things, or that trading penny stocks are bad things. Some people are very successful with them, and certainly stocks go through cycles of accumulation and distribution that you need to be aware of. But the most important thing to understand is that if you're a struggling trader or you're not consistent, then your focus really shouldn't be on, hey, how much money can I make? It should be trying to become consistent first, and consistent over a period of months, even years, before you really start putting any serious weight, any serious money behind your trades. Maybe that's a little off topic there, but I had to say it. So you're really only looking for two things to start out with, and that is range and liquidity. So we're all on the same page. My definition of range is any stock that will yield you significant movement in both directions. One thing to take into consideration as well is stocks don't go up or down. They go up and they go down. So when you go back and you look at a pattern, such as the very first one that we showed here, that's not it. Okay. You see this thing doesn't just go up. Sure, it's going up over the span of a few days, but intraday it's going up, it's going down, it's going up, it's going down. It keeps doing that over and over. And with a stock that has liquidity, where you have the ability to get in and out as quickly as you can, ones that trade on higher levels of volume, ones that have short shares to borrow, if some of you traders are into short selling, this gives you an enormous amount of opportunity to both sides, because some of you with experience realize on a stock like this, you could buy it on the break and then you can short it after the rip. I mean, you just keep doing it. You can be bullish 1 minute, bearish the next minute, long 1 minute, short the next minute. And you can do this however many times out a day where you see this type of a setup. So what you're looking for here is range. I like to look for something that has about $1.50 a day in it. So a stock that will normally move $1.50. Now that $1.50 is based on my position size, because I'll usually trade 300 to 1,000 shares of something on average. So I'm looking to capture $1.50 per trade on something that I do. Now, if you like to trade, that normally leaves me in higher priced stocks, $100 or higher in most cases. If you're somebody that wants to trade smaller stocks, then maybe you don't need a whole dollar. You just need something that has a good amount of range in it throughout the trading session. And you can find that in $20 stocks, $30 stocks, and so on. I just happen to like the 100. Now, one thing to understand as well, so everybody's on the same page, is one of the bigger confusions about is the comment liquidity. It doesn't mean necessarily volume. Liquidity means you have orders on both sides of the trade. For trying to make this short, that gives you orders on both sides of the trade. So some of you ever traded some of those micro caps. Well, one of the tougher things with those is once they kind of burn through the float and the volume dries up, you no longer have any liquidity in that name, and it could be hard for you to get out at a good price. So that's what we mean by liquidity. So these are, in my opinion, what stocks work best. Now, I'll show you some of the ones I use. Maybe you guys use these. Maybe you don't. Maybe you can start putting it on your watch list. But since most of you are aware of trade ideas, I'll help you out. If you look at the bottom, you can send me an email right now, support@thelincolnlist.com. I want you to title it in the top. I put scans. I will give you my scans. I'll just give them to you. I'll give you the code. You type it into your cloud, upload it, and there you go. You can see my screen, not my actual trading screen, but you can see my scans. I'll give those to you so you can see what it is that my setup and such. So my favorite is Tesla, Nvidia, Netflix, and BABA. These are always on my list. So I'm sure many of you have a watch list. These are always on my list. I think like Tesla's probably the best one here. There's always a trade on Tesla. It doesn't matter what day of the week it is what the situation is, you will never just get 50 cents of total move in one day, even on going into a holiday weekend in the middle of the summer on 4th of July. You will still get a $3 move in one direction or the other with Tesla. It just does that. That's the way it is. Now, underneath that, I got Rotate, Shop, W-Day, Wayfair, Lulu, Facebook, Apple. And what's that mean? That means rotation just means that sometimes those are not, they don't always have an opportunity every day in those. They're more specific towards accumulation. Like lately, Shop has been a stock that's just been going up a lot and offered a lot of opportunity, but it trades much thinner than the names above. When you get to something like a Facebook and Apple, they go through their accumulation, but some days can be very dead or very dry days with those. So just for your purposes there. Those are the ones that I like. So let's move on to the strategy here. How should you trade these? What are you looking for to trade them? Well, it's pretty simple. I mean, your strategy is all about observing the price that falls around support and resistance levels. I mean, one of the things that you're going to learn by doing this is, it's kind of crazy to say this, but you'll figure it out. It's one of those things, if you, like I said, if you stare at this stock, maybe some of you've done this before. Maybe, like I said, maybe you trade nothing but an E-mini, or you've traded nothing but foreign currencies, or you constantly look at a stock over and over again. Maybe one that you've been in. That might be a good example for some of you. When you have skin in the game and you're actually in a trade and you become fixated on it and you're constantly looking at it, you just kind of know what it's going to do, right? I mean, you just know what this thing is all about, how it behaves, what it does, the way that it acts, all that good stuff. You already know. So you're going to figure out the strategy. But I know you came here to learn more than just that, right? Don't tell me, just watch it and you'll figure it out. You need more than that, right, guys? You need more than that. So I'm going to share with you a couple of my favorite ones here and how I like to trade them. Now, this is just the way I prefer to do it. It's not the only way. So when I'm looking at one stock, one trade, you certainly could do maybe 2 stocks, 3 stocks a day. You can do more than one trade if you so choose to do so. But I'm going to share with you a couple of my favorite ones that I like. And there's 2 that I mainly use. One is going through pre-market highs or pre-market lows. And this is a type of trade that works out best at the open or within the first hour. Mainly after this point, stocks usually start to really slow down. And I say usually, that doesn't mean 100% of the time. It doesn't mean you're not going to get any action in the middle of the day or late in the day. But I think for most of us that trade, realize that most of our money is made within the first hour or 2 out of every day. That doesn't mean we don't sit and obsessively look at stocks over and over again because we're addicts about this. It just means that's where it's at, and this is where that strategy is going to yield you the better results, because in the morning you have volume and you have emotion. And when people act out of emotion, it gives you the opportunity to take advantage of certain things. And then the second one is a reversal into either support or resistance, where maybe you miss this initial pre-market. Let's say you're trading a pre-market gap and a stock goes vertical, and some of you sit around and you're like, oh, damn, I missed this stock. I missed it. That doesn't mean you don't have another trade. If you watched it enough, you probably know it's going to pull back. It's going to sell back a little bit or back test some of that big green. Then you can look at maybe shorting into a big resistance number or vice versa. Now, these seems to work better on gap ups. We don't get a whole lot of gap up, gap down days anymore, but a lot of times these things will gap up, then trade back into the gap, kind of wash out for the day, and then take off. So I'm going to show you what these look like in real time. I'm going to move off of this and bring up you guys can see that, right? Everybody can see this. So let's take a look at something. Yeah, let's look at what a gap up would look like in a real-time environment, because this is the only way I think you'll really understand how something like this works. Just give me 1 minute here to set the date, set the time. Just give me 1 second here. Any of you guys traded Roku? Thing got hammered today, didn't it? All right. Hopefully this comes through. Let me back this up just a little bit. Because one of the things that you're going to look here for that we're not going into real deep is when these things, because of the way these stocks trade and because of the players that in, it's not just retail. You've got institutions, you've got algorithms. The thing maybe some of you that I haven't touched on today is when these things cross those specific areas, like pre-market highs, or when they flush down into support. The thing that you get with these type of stocks is you get these instant moves. When they start to break through that range, they explode. That's where you start to see these epic explosions of these stocks. Now, sometimes they'll last a minute. Sometimes they'll last all day. You don't know, but normally what happens when I talk about watching these over and over again, the predictability of them is when these things clear through high a day, or they clear through pre-market high, or they go under pre-market in the morning, you normally get some sort of cash flow, cash type of move quickly. And that's what you're here for. So let me see if I can back this up just a little bit. All right, there we go. So let's just do this real quick. This is like last week. I'm just going to put some resistance up here. I'm sure most of you can see this right here, pre-market highs. I usually like to buy them right when they go through pre-market highs. Now, on this one here, when I talked about you're just looking for support and resistance numbers, you got some pretty good resistance here at 69.50. But if you kind of back this up a little bit, you see this? This was the day before right here. So that we're all on the same page. This was the day before, and this is at the market open. You've got your emotion, you got the volume. So when you're looking at this, let's say this is one of the ones that you're staring at. You realize that if you get a move through that, that's 2 days worth of resistance. You should see a heavy chase. And that's kind of what you want to kind of get in there prior to the chasers. But I want you to just look at this. Just look at the candle. Look at the volume on that candle and how this thing starts to run. Now, for some of you that are a little bit more advanced, there's a little more to this, which I'll share. It's also breaking out on a daily time frame, which kind of backs up this move. But when you look at yourself and you're asking, how do you know something's going to move like this? Well, you don't always know that. You just have to trade the setup or trade the way that it's working, the volume and such. But one of the things that we often make mistakes at is we miss that entry. So like a little bit later here, this thing will go up. It'll go up a little bit higher here. A lot of traders come into it and they realize they miss it and they get kind of mesmerized by these green bars, and then they start to chase them. And then that's just bad news. That is just bad news. You're just going to end up losing all kinds of money by doing that. So when you're looking at this, and you can see like so far it's really stable. And the reason that it's stable is because it's now breaking this level and it's just sitting there sucking buyers in left and right. So what you want to do is you want to be in here on the break so you can get maximum cash. You don't want to be all the way up here. If you're buying up here, you missed it. You just missed it. Maybe you'll get away with it once or twice in a bull market, maybe, a few times, but overall you're going to pay the price by doing something like that. But what I really want you to take away from this is when you're looking at that chart, it's the speed. It's the speed of that break. So a lot of traders often talk about breakouts too, right? Everything's breaking out. You see it on Twitter. This stock's breaking out. That's a loosely used term. Not everything is breaking out. There are different levels to different breakouts. But as we talk about the strategy, the point of it is focusing on that one name. Roku's a great stock right now. You had like a $10 down day. For God's sakes, I mean, you can make tons on something like that. But getting back to the point, when you see something like this over and over again, you'll know that this is probably going to be the most predictable outcome for this stock. Now I'll show you what something like that looks like on the short side. For those of you who'd like to short. So you can see when they start taking out opening range highs, opening range lows, you normally get a pretty good move in some of these. Okay, here's kind of like the same thing with NVIDIA. When I say fading into the gap, rolling over into the gap. Here's another one, just kind of, you're looking at your base from pre-market, you know, and you see it already kind of traded underneath of that. But if these things can start building under these levels, or you start to see those moves get taken out, then they normally flush a little longer. So like you can see, like look at the size of the candle. You can see how aggressive it's starting to get. And this is one of the things that traders overlook as well, is the speed of a move. It's not so much what it did, but how did you actually do that? That induces panic. Now, I will say that this in a really bull market or a big melt up market, these are a little bit more difficult to reel off. You have to be a lot faster when you're going down to the short side, unless you have some building or something like that. When I say building, you're talking about, you know, stocks that hold these levels or test these levels a few times and then they break through. But it's no surprise that it gets that way. Once they start clearing this level, that's what they do. So it's kind of a pretty simple strategy for you to use. You see it, what it looks like in real time on real stocks and stuff like that. So if you're looking at something, Netflix here is a great stock. One way that you can, I'll give all of this to you guys here. We'll kind of do a quick review. The theory behind the one stock, one trade is it eliminates your decision making. And it's no secret that when we get tons of decisions thrown at us, like if you go buy a car and they say, what color do you want it? You know, white, blue, green, red, black, yellow, you know, like a black. And do you want it in a convertible, vinyl top, hardtop, sunroof? You know, maybe you already had your mind made up when you went there, but now they're presenting you with all of these different options. It's confusing you. And it's making you second guess yourself. And this is dangerous. As traders, we second guess ourselves all the time. Because when we make a decision, we see the ramifications of that decision right away. So we're always second guessing. We can always hesitate too. So sometimes we've all been in that position where we've had an idea and we just kind of blew it. Like we sabotaged the idea. We just screwed the whole thing up from start to finish because we froze. If that's you, much of that problem could be by the constant rotation of new stock names. You know, it takes a while for a trader to really be able to process information that comes their way. It all feels overwhelming when you first start out, or when you're struggling, it feels overwhelming. And I've been able to go onto other stocks and trade different things multiple times throughout the day. But when I get stuck in ruts where my trading starts to look terrible, then I go back to just trying to put things in at the basics. And like I said, you don't need anything for this. I mean, you can just start tomorrow, put Netflix on there, put Tesla on there, draw yourself a few lines and sit back and just watch it. You don't need anything, no moving averages, no fibs. You know, maybe later on you can tie those things in. But if you're somebody that's not doing as well as you want, you're struggling, give this a try. Take a look at just focusing and trying to simplify your trading business to where you can get a handle on things to where you can forecast moves. Because if you sat and looked at this thing all every day for 6 hours, you're going to learn things about it that you just didn't know. So if you want to, I'm going to give you something here on Netflix, just kind of giving you an idea how you can start out your day. And this goes with any stock that you pick. To me, support and resistance is always the most important indicator. You know, the rest of that stuff is just maybe sprinkles on an edge here and there. It's some data that gives you a reference point. But when it comes down to it, if somebody wants to buy something at a certain price, they buy something at a certain price. It's not up to me to set the price or decide whether something is overbought or oversold. It is what it is. If this is the market price, this is the market price. And by looking at this, you will see where buyers step in. So when we looked at that first chart, you know where buyers are and you know where sellers are. The problem with amateur traders is they're buying where sellers are and they're selling where buyers are. That's why you lose money. You're on the wrong side. And you don't want to be on the wrong side. In case you didn't know, it's not profitable. But just start out your day like this. Start with your pre-market. If you don't have pre-market put on your charts, put it on your charts. You need the data from pre-market. And you just start with simple lines. You just go right from the top of pre-market like this. And you go right to the bottom of pre-market. You know? Now, one thing to understand, I always try to make this a point when it comes to technical analysis. This is not perfect. Don't expect it to be perfect. It's not just going to go down to a certain number almost to the penny every single time. You got to, you know, something like Netflix, it's a $300 stock. You're going to have to give it some flexibility in there. It's just a reference point where you look at a chart and you say, I can do some business here. I can buy the stock here. I can short the stock here. You know, so you look at this one here. I think this was from today. Is it from today? Yeah, this was from today. Just to give you an idea there. So you can see how one of these trades can be done in multiple directions. So in the morning, here's your pre-market lows, roughly 355.14. We'll say 355. Look what happens first thing in the morning. It takes out 355, and look at the size of this candle. I mean, look how big this move is right here. And this is just panic. Now, one of the reasons probably is because you got stops sitting down here at lows. But let me just take a look at the move. 355 to 353s, all within a couple of minutes. I mean, that's like $2 a share in a couple of minutes. You guys can get by on that, right? You can buy on $2 a share every couple minutes. Well, it wouldn't be every couple minutes. You can get by on that, right? And don't let the price of the stock fool you, right? You don't need cheap stocks all the time to make money. I mean, how much do you need if you're going to take $2 to $3 a share? I mean, if you just had $20 a share, 20 shares, I mean, 20 shares, something small like that. That's $60, $40, $60 first thing in the morning within the first half hour. That's not bad, right? Considering you can do it over and over again. And then you'll see it bounces back up. You know, again, range here. Then it comes from 353 all the way up to this 356s. So now you got another 3 here. But look what happens when it finally takes out that pre-market high. Some of them happen early. Some of them happen a little bit later. But look, once it does, it gets going and puts in even a higher move over and over. So one of the ways for you guys to do that, we'll just use this one. And if you want, you can get back to me later on this. Just start right here with drawing you some lines on your supports and resistance. Let's do this right here. Put your one up top. I know some of you already know this stuff, but you'd be surprised how easy it is to overlook the basics, and then ultimately end up getting confused and then having FOMO, feeling like because the market's open, you have to make a trade, and then you lose out. And if you need some more of this, if I didn't explain something to you good enough, just feel free to send me an email. But I just look for every pivot. This is a 5-minute chart, by the way. Okay. And you'll have to go back a little further over here to get some highs. But let's say Netflix drops tomorrow. You get a drop in the morning. You're probably going to get a bounce somewhere in between this area. If it drops first thing or gaps down somewhere into this area or this area, you'll probably get a bounce, because that's normally what this thing does. Just like it did today, it drops down in here. And the great thing about this strategy is when you're looking at it, you can still screw up and miss. So if you were just slow, you hadn't had enough coffee yet, you still have like crust in your eyes when you got up and you missed this drop, you're like, damn. You just look for your support. You're like, oh, well, it'll find a spot. Look right here. From the previous day, almost right into this little support here. Again, if I'm going too fast, you guys need to go over this again. Just send me an email. Anyway, goes right into support. You have another trade. That's the point. You've seen this thing enough. You've traded this thing enough to know that that's probably what it's going to do. Again, it's not 100%. But most of the time, you'll be able to predict the move. And even when you're wrong, you'll know, well, since that didn't work, I probably know what's going to happen next. This gives you the ability to cut your losses early. So again, when you know these things, you know where they normally bounce. You know when they bounce, how long it takes it to bounce. So if you get into one of these and it doesn't do anything for 20 minutes, you could say to yourself, let's say, hypothetically, you've watched it forever and it normally bounces right away. If it's sitting there a half hour goes by, it's not. That's abnormal for the stock. The only way you would know it's abnormal is because you traded it so many times. I'm sure this is all making sense to you now, but I'm being repetitive, just like these stocks are repetitive. I'm being repetitive. But the point here is you're constantly looking for these levels. I love them when they break pre-market highs and pre-market lows. But there's still tons and tons of trades throughout these numbers every day of the week. So, if it goes above this, start looking for areas, 364s, probably goes to 364 and so. But if it does drop, because these are here, take a look at it, just like it did this day right here. Trades up into there. I got chicken scratch all over here, but kind of draw these lines or pick your favorite stock and just watch it. Just watch it for a day or so and see how the thing works. So what I'm going to do here is I got something for everybody, because I know when you first talk about these, sometimes we move along fast and it's hard to grasp what you're talking about. Sometimes I talk just way too damn fast and I get carried away. But two things here I'd like for you to do. I just made this new DVD, and the best part is it's free. It doesn't really go into the strategy much, but it talks about many other things and many other aspects of trading. The three main components every trader needs to be successful. It's free. All you got to do is follow that link. No credit card required, no strings attached, nothing. Just yours free. It's my gift to the trading community. And then next, for everyone that's in attendance here, it's one thing for me to show you a bunch of charts. I've always been on this side of the ballpark when it comes to trading. It's one thing for me to tell you, hey, this is how it works, or this should work. But it's another thing for me to show it to you. As I said in the beginning, I trade live every day on screen at my trade room every single day. No credit card accepted here at all. Just if you guys want to see this work in real time, you want to trade with us in real time, I'll give everyone a week free trial. Actually longer than a week. If you do it now, it'll be like a week and a half. But like I said, it's one thing for me to say, this is how you do it. This is how you find it. This is how you trade it. Because charts are always 20/20, right? Hindsight's always 20/20. Charts are always 20/20 when you're back testing and look at them. It's a completely different ball game when you're talking about seeing something and then being able to execute. And that's really what this strategy helps you with. Where traders fail in a lot of areas is not their ideas. Most of us are smart enough to come up with a relatively decent idea. To me, charts are simple to read. It's just a green bar, red bar, and a line. I mean, it's like third grade material. You don't have to be a rocket scientist to figure out how to read a chart. It doesn't take that long to grasp that part. The two things that it really comes down to is executing. When you have an idea and you draw determination, this is where I'm going to do business, or this is where this stock or financial instrument should explode or dump or bounce. It's executing. It's being confident in what it is that you're doing and your strategy because of, again, routinely doing it over and over again, the constant repetition. That gets you over the fear of hesitation, being able to execute like you know you have the ability, being confident to execute. That's what it's all about. It's about execution. Then the next step of that is being able to manage what you just executed, right? And I mean, a lot of us have been in trades before where we know we're wrong. We know it. It's right in front of our faces because we're losing money, you know, like lots of it in clips. So you have to be able to have those two things, that execution. You have to be able to realize when you're right so you can hold. When you're wrong, you can get out. And those are the two big things that really hurt traders. So I'd like to be able to show all of that to you to keep me from rambling on here. Show you what this looks like in a real-time environment, how we actually trade these stocks, how we look at these stocks, how we find them, how we forecast them. But if you don't, pick your favorite stock, start out tonight, draw you some lines. I know it sounds like something you read in your first technical analysis book. But like I said, you'd be surprised how easy it is for us to overlook the basics. Trading doesn't have to be complicated. If it's complicated, it won't work. The people that lose a lot of money are those that continually think, I got to beat the market. I got to one-up everybody. I got to get ahead of the game. I got to think before Wall Street thinks. I got to speculate. No, you don't. You just need to find something that gives you a tiny edge, and that's your world. Tesla is my world. NVIDIA is my world. I don't need anything else. Normally when I look for things like that and I start to get clever, well, that's when bad things happen to Dougie. But anyway, I'm going to leave it at that. If you guys have questions, I'll be glad to answer them. Like I said, I don't see anything in chat. Let me type something in chat. I can't see any.
Yeah, so what you should look for, Doug, is expanding the questions panel instead of the chat. And I can read some of these to you, if you'd like.
Where's the questions panel?
It's usually underneath sharing, and then underneath that is webcam, then audio, then dashboard, attendees, and then chat is down there somewhere next to polls. And if you can click on the expand caret, like the little arrow.
Oh, there we are.
But if you can't, yeah, then scroll down. You can also pop that out, but I can catch some of these for you. I'm just looking for anything that looks like it's a question you should be answering. Some of them look like they were asked at the time you were demonstrating something. Here's one. How do you determine if a stock is a good candidate to focus on? From Benji.
Okay. It comes by range. You're looking for something that has significant movement to it. I look for something that yields between $2 to $5 a day. So when I'm looking at a Tesla here'd be an easier way for you to do it. You start out with the daily chart. Okay. Look at a daily chart. So when you look at these candles, you estimate, this is all you have to do. You don't need any, just use your eye. How big is this candle? So you look at this one, it's like 284 to 296. That's $10. That means that stock moved $10 that day. And you have that range. Now that's what I look for because, like I said, I trade 300 shares to 1,000. So if I just want to throw a couple hundred on this, I have the opportunity to get maybe a $5 move. I won't always get it, but it's there. The stock gives that much every day. Now, on the flip side of this, for those that are saying, hey, these are too expensive, I want you to look at it two ways. It works with any stock. So let's say I just want to pick something that's $20 stock. Well, I don't need $5 a day out of a $20 stock because you can trade 1,000, 2,000, or 3,000. You can trade larger. So maybe in that case, you're looking for 50 cents. You pretty much just need something that has enough volume every day. I would say 500,000 at bare minimum. I would think even maybe 1,000,000 a day to give you enough liquidity and the possibility to capture the move. Because if you're buying a breakout on a low volume, illiquid stock, you're going to have trouble because you need more buyers to press that stock higher. If you don't have any, it's just going to sit there and do nothing. So you can move to the lower ones. Now, the other way I want you to think about it is don't let the price of the stock fool you. Look at the move in the stock. So if you're trading a penny stock or a microcap stock that's $5, unless it's like one of those pumps that are going on that you get, like, what was it, Seal the other day, one of those kinds that come by every so often, you're probably not going to get you're going to get $5 out of something like that. You know, they do at times. So look at it in the move that you're getting out of it. You know, and there's, like I said, those things have a shelf life too. Like Seal, it's like it's not in play right now, so you got to kick it to the curb. But you can just pick a cheaper stock. Just pick a cheaper stock. Just look for the range that you need. What is the range that you're looking for? So if you want to take, what would you consider to be a good win? I'll ask you guys that. What would be a good win? So if you bought a cheap stock, what would be like an average win if you trade cheap stocks all day long? What would be a good win? 25 cents? 30 cents? Then just look for something that gives that to you. Yeah. So look for something that gives you that 50 cents. Where can you get 50 cents to $1? What moves $1? There's tons of $20 stocks that move $1, $3. You had this, but you know, when you get into the other ones, this is the kind of stuff you get, like this GH today. Look at this, 61 to damn near 100. I mean, you got some. Yeah, GE you can get some good work out of GE right now. Got a lot of volume in that. That's doable. But like I said, I do have these on a scan. You guys want the scans? Just send me an email. I got the scans.
So another question is if you like any cheaper stocks between around $20 to $70 is the range that Stan is asking for.
Yeah, like this WTW right here. It's been pretty good. It's been doing pretty good lately. Like you got a pretty good move here on this WTW. 60, 70 cents. So you get some good volume and some nice. These are what you're looking for. These nice moves the stock makes a day like this, because you can capture this and this and this. You know, you just have to use a little bit bigger size.
Got someone else wondering if it works for mid-cap stocks because he's saying it looks like you focus on large cap. I think it's a similar question to the previous one.
Yeah.
Price range, though. Okay. How do you deal with algo trading after the first hour of trading?
Oh, I don't. If the setup is there, that's what you want. That is what you're looking for, and that's why I think it'll work with anything. I think it works a little bit better with some of these pricier stocks where you do have those algos in your favor, because when you get that range break, you're going to see that big move because it's algo driven. It's institutionally driven. And that's where you're going to see those massive moves. I mean, like, look at, I know it's not perfectly tradable, but this is what you get when you get institutions is, look at this BA. You guys are around for this BA today, right? I mean, look at this thing dumping from 373 to 363 and then like just V-shaped ripping backwards all the way back up, not backwards, actually just ripping right back up. So like in the span of an hour, this thing moved $30 in total price. Now you're not going to catch the tops and bottoms of it every time, but this is an extreme example. But this is what these things do. And the thing is when you're staring at it every day, you kind of know, from the outside when you look at it, it's like I can't trade that. That's too sketchy. But when you see it all day long, you're like, it's not sketchy. But if you're looking for cheaper stuff, that's this little Neo for you cheapy players out there. Neo, $6 here. This has got some good range to it right now.
So what are about the maximum price spreads that you trade?
Oh, and this PYX is a cheap PYX. The price spreads.
Mm-hmm.
I don't pay too much attention to those. Most of the time, when you have liquidity, it's within a pretty decent. Like it's maybe 20 cents. Less than that. When you get into the thinner names, it's like I don't want to do anything that's like 50 cents or $1. That's a joke. I like to keep it. 15 cents would be my max spread that I would pay if I really wanted to trade. But most of the time on these names, even though you have the bid and the ask, you can kind of put your order in there where you want it to, where you think it will fill, maybe in the center. And you'd be surprised with the liquidity they get filled.
Right on. So we've got a couple attendees asking for you to put your email up again, to email you to get the scans. So if you could go ahead and reiterate what your contacts are. And then I think I'll just ask anyone else to shoot you an email with any questions and to sign up for your trading room.
Yeah, you guys can, right here, support@thelincolnlist.com. If you want the scans, just title the email scans. I'll send them to you. You can just upload them on the cloud with your trade ideas. And then if you want the trial to the room, just type in trial and I'll get everybody set up. And then you can take a look at it and trade with us. See if you like the strategy. See if you can make something out of yourself.
Right on. Well, thank you, Doug. We're going to have a recording of this up later on tonight or tomorrow after it gets converted into the appropriate format and I get it on the YouTube channel. And we'll shoot an email to everyone that attended with a link to the playlist where they can find it. And Doug, feel free to follow up with the attendees also.
All right, I appreciate it. Again, if you guys have any questions, you know how to get in touch with me. And hopefully you make some money.
I'll put the email address right underneath the YouTube video too, so everyone will be able to find it.
All right, perfect.
Thanks, everyone. Have a good night.
All right.